Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is debits and credits. Sometimes it's a real nightmare for a lot of accounting and business major students, but it's not so hard. So let's check it. First of all, let's go back to our accounting equation. Assets equal to liabilities plus stockholders' equity or shareholders' equity or owner's equity or just equity. And by the way, we have a video about accounting equation that is in our video description. So what do we have here? Uh, this guy here, we call it T account. And we have two sides, the left side and the right side. The left side is our debits. The right side is our credits. But we can also work with columns on Excel, and that is what we will be working in our Excel file. That is also in our video description. So what do we have? Debits. It's everything that increases assets or decreases liabilities and stockholders' equity. Uh, the right side is our credit. Credit is everything that decreases our assets, increases our stockholder or our liabilities, increases our stockholders' equity. Remember, this is the most important picture that you need to remember. Okay, guys? And let's uh, let's check it in our stockholders' equity. Stockholders' equity, usually we have two huge accounts, common stock and retained earnings. Retained earnings, it's revenue, less expenses, less dividends. Revenue, usually we don't have anything that decreases revenue because what decreases revenue is expenses. And if you are talking about IFRS, that is international accounting, what we call here in the US, we don't have this debit here because we never debit revenue. So usually revenue, we increase it with credits. Expenses, we increase it with debit. And expenses, we always increase it. It doesn't make sense to talk about negative expenses. The same as dividends. We pay dividends. We don't collect dividends. We collect common stocks, but not collect dividends. And when we pay dividends, we are debiting our dividends. Let's review it in our Excel file here. Debits and credits. And we have here assets with some assets accounts, liabilities, and stockholders' equity. And we have 10 transactions here. And our convention will be debits, the yellow cells, credit, the green cells. Why yellow and greens? And green because it's the color of Brazilian flag that is my home country. Nothing special here. And debits and credits, we could also name it, for instance, George and Scarping. We name it debits and credits pure convention. Okay. So, first transaction, sell shares of common stocks for 25,000 to obtain the funds necessary to start the business. We are increasing our common stocks 25,000. And if we are increasing our stockholders equity, we are talking about credits. And we are also increase our cash 25,000. So we are debiting it. Okay. Transaction number two, and these transactions I extract from the Principles of Financial Accounting from Iceland. Okay, but we have a lot of other textbooks with the same examples. Borrow $10,000 from the local bank and sign a note promising to repay it in 3 years. So we borrow this money, so we are adding this money to our cash. So we are debiting it. We are increasing our notes payable. We will pay it. So we have a liability. Notes payable. So we want credits. Uh, Transaction number three, purchase equipment for giving golf training, 24,000 in cash. So we are decreasing it, negative 24. In accounting, we don't have negative numbers, so we have a credit here. Equipment, we are increasing it, 24,000. Increasing assets, we are debiting it. If I am moving too fast, just rewind our video and watch it again. Pay 1 year of rent in advance. So it is not an expense, it is our prepaid rent. It will be an expense over the month or over the years, here over the month. So let's do it. We are paying it negative 6,000 credits because it is decreasing our assets. Prepaid rent 6,000, increasing it, our yellow. Transaction number five, purchase supplies on account. So we are increasing our inventory. We are increasing it in $2,300. Debit, yellow. We here purchase on account. So we will pay it later. So we have accounts payable 2,300. We have accounts payable here green. And if we check here on December 31st, we are summing our accounts here, summing our account there. And here we have the sum of our assets equal the sum of liability plus stockholders' equity. These two numbers must match all the time. So this number here, they must match all the time. Transaction number six, provide golf training to customer for cash. So we are increasing our cash. And we are providing training, we are providing services. So this is a revenue. Revenue increases our retained earnings. So if it increases our retained earnings, we are crediting retained earnings. Transaction number seven, provide golf training to customer on account. So it will not increase my cash. It will increase my accounts receivable. We have here debit because we are increasing our assets. And the same golf training here, also a revenue. Revenue increases our stockholders' equity. Our numbers here, our totals, they match. That's cool. Transaction number eight, receive cash in advance for 12 golf training sections to be given in the future, $600. So 600 we are receiving in cash. So we are increasing our assets. Let's debit it. However, it is not a revenue yet because we are receiving it in advance. So we have a liability here. We need to provide service. We have the obligation to provide service. So 600, we are increasing our liabilities. And pay salaries, 2,800. Negative cash, we are paying. So if we are paying, decreasing assets, credits. Paying salaries, it is an expense. So we are increasing expense, reducing our retained earnings. If we are reducing our retained earnings, we are debiting it. Pay cash dividends, $200. We are paying. So here we have a debit or credit, I don't know yet. Pay cash dividends. Dividends decrease our retained earnings. So we are decreasing it. So we have a debit. Well, these numbers are not matching anymore. That's because this cash is wrong. We pay. When we pay, we are decreasing our cash and we are crediting. So here, now we have the numbers matching. Here we are working with basic transactions, only one debit and one credit. We have more complex transactions where we work with more than one debit or more than one credit. We can do it, no problem. However, the sum of our rows here, the debits and credits must match. Okay? So, guys, that is debits and credits. Please, guys, subscribe our channel. We have 3 new videos each week. And if you subscribe it, you will be the first one to know. If you have questions or comments, leave it here or email me at jscarping@gmail.com and like our video. Okay, guys? So God bless you and have a very nice day.